I let 11 algorithms trade for me for a month. Here's what happens. This is my equity curve over the past 30 days, and I want to be completely transparent with you. I didn't touch a single trade. My computer executed everything for me, and I will be honest, when I show people my trading, the reaction is usually underwhelming, for the main reason being that there's no 10x leverage plays here, there's no meme coins, there's no dramatic entries or exits, there's no huge machine learning algorithm controlling everything. And for the most part, on a daily basis, it's kind of boring to watch. But here's the thing. I used to be one of those traders glued to their screen, making exciting trades, absolutely hooked on the adrenaline of, market open and all those sort of things. But now automation does it all for me. And this month, it did pretty well. If we look at my equity curve, I'm up about 18.53%, I believe. And this would be, I think, one of my best months ever in my career, at least for automated strategies and not me like gambling on something when I was really starting out. Now, I will say, one thing I've learned over the 6 years of trading, I don't really like to aggressively rank my performance being like, this is my best performance ever. I'm so happy. For the main reason being is that you never know if the next month is your worst. So I like to try and, for the most part, remain calm. I do like to, sit back for a moment and be really appreciative of how far I've come. But in trading, it's often when you start being overconfident, especially for myself, that's when normally things turn for the worst. So it's a great month so far. Absolutely amazing with it. But let's get more into the stats. Now, actually, one thing I didn't mention just yet is I've been completely sick this past week. Now, my voice might still sound a bit groggy, but I've had probably like 10 strepsils. And it's the reason why this video is so late. Normally, I publish on Fridays, but I was still in bed for the most part. I just couldn't get out of it. But still, over this past week, 74 trades were executed perfectly. And I put out this tweet a couple of times on Twitter that, trading is a huge key man risk business, especially obviously if you're retail, obviously not as much if you're a fund. But when you're a retail trader, especially if you're doing this for your living, it's a huge key man risk, meaning that if you're ill, if you have to go somewhere for a month, for example, you can't really execute any trades, or maybe you'll be executing them way worse and actually lose money when you shouldn't have. Hugely appreciative of all the work I've put in to be able to have these 74 trades execute perfectly. Now, obviously, were they all winners? No. There was a good amount of losing as well in there, but they all executed to the plan, and that's the main thing. So in this video, I'm going to break down exactly what happened over this past month, show you the good, the bad, and some of the unexpected things that came up as well, and why letting a computer trade for you might be less exciting, but it's probably more profitable than you think. So getting into the performance of each strategy, there's 11 strategies here in total. That's because it's including crypto as well now into this. I kind of got everything into Quant Analyzer. If you're wondering what I used to kind of put all my strategies in, you can see all this performance here. I use Quant Analyzer. It's a great way to import from different brokerages or different markets. So it's a great way to look at everything in total. Now, total net profit was 18.53. Drawdown was 7.47%, and total trades was 359 trades. Now, I will say this month, one of the unexpected things, I wasn't expecting that many trades. Last month, if I remember off the top of my head, I think it was 180, give or take. And normally I'm in that sort of realm, 180, 200, maybe a bit less, ideally. So 359 is quite high for me. I will kind of get into that in just a second because the market was pretty hot, at least for a good period of this month. Where there was a lot of volatility and a lot of things you could take advantage of, or at least the systems did, right? So that's why there were more trades, but there were some swing strategies that basically didn't execute. Like this just had one, this had two, and then this had free trades over the time. If you're wondering why I blank out the name, it's because I've probably tested hundreds of strategies by this point, and I've coded each one of them. And a big lesson of that time is I try and name each one as clearly as possible, for the reason being, when you don't touch a strategy for 3 months, 4 months, and you want to go back and look over that idea, if it's not clearly named, it can be very difficult to find, and then two, to even understand what you did. So each one of these are named very clearly, and I don't want to reveal all my kind of strategies just yet. Now, the highest performer is 7.33%. This, I will say, I don't think I've ever achieved on a single strategy before. I might be mistaken about that because there's been quite a lot of months over the past couple of years, but I believe this is one of the highest performances, at least on a singular strategy. So very proud of this, but you can also see it took on a decent amount of drawdown of 4%. So on a drawdown to return basis, it wasn't that impressive, but at least over on an absolute, it was quite amazing to see. We did also have some really nasty strategies kind of draw down this month. We had one lose about 3%. We had a couple at break even, but we did have two strategies in total lose 3%, which is also on the higher end for me. So this will be something I'm looking at to see what kind of really went on this month for volatility side of things. Why were so many trades executed on this? I do have some ideas already. I've done some slight testing, but I'm not necessarily worried yet because the main purpose of running this many strategies is to have low correlation between them, or at least try and have uncorrelated, and then for them to also stabilize each other, right? So you have trend following strategies that are more looking for continuating trend, but they'll also lose a lot during choppy periods. And then I have mean reversion strategies to perform during that time, and then they'll lose a bit when it's kind of trending. On a overall basis, it was a return to drawdown ratio of 2.48, and winning percentage across all the strategies was 52%. I often see so many people online say you need a 70% win rate strategy, or even if they're systematic, they're trying to like up their win rate so much because it's just easier to deal with psychologically. And I understand it, but it's very difficult to have something that's such high win rate unless you're taking on huge tail risks, and then you're gonna have a really volatile equity curve, which could drop a ton because of one, outlier, for example. So I'm overall, I don't mind being at 52% win rate overall. I'm often, I think, a bit lower sometimes, but this month was quite decent overall for overall the strategies. Now, one thing, if you've been watching these recaps before, I kind of do these recaps every month. Most of the time I am always negative on short P&L, and I always explain it being that, most of the time, at least in these trending markets, short is more of an insurance, meaning that you're not necessarily going to be making crazy absolute returns on shorts, but they will stabilize when these markets turn, and then that can protect you on the other side. Now, this was definitely one of those months where it really paid off. So still, majority of the P&L did come from long, about 12.5%, but we got about 6% coming from shorts, which is way higher than I really had in at least the past couple of months. Most of the time, that is at 1%, or I'm losing about a percent or two. And I'll show you that exact trade that made up most of this P&L. This was on, I believe, October the 10th, and NQ just completely flushed the whole day. And one of my strategies basically went short from the open, and it held until end of day, and I captured the whole move. This is a clear example of if I was trading this manually, I would not have been able to hold this position. I think this position alone made me about 15 grand, if I'm not mistaken. So this is something where I would have seen 10 grand manually, and I probably would have taken it off. Because I never try and say that I'm an amazing discretionary trader. I'm not. I automate my strategies because I'm not a great discretionary trader. I know some amazing discretionary traders, and while over the years I've definitely become better than what I was in year one, it's still not something where I'm comfortable putting a large portion of my portfolio into discretionary trading. Most of it is still in systematic strategies like these. Now, next is how that P&L looks over the time. So this is just a short P&L. The equity curve at the above was long and short. This is just short. So I wanted to show you a clear point of kind of how short strategies, especially in trading markets, work. So you can see here, this is October the 10th trade, where it basically shot up to about 12% in total for return. It is a very clear example of how when your short strategy does capitalize on that insurance, meaning that one of those days that the market does turn, you have this huge boost in P&L, which is great. It pads everything else that's losing. And then most of the time, if the markets continue to trend up higher, you're kind of just in a steady downflow. So I did obviously lose a decent amount of this short P&L over the next 20 days, give or take. But it worked as intended. So I'm still completely fine with it because then my kind of long strategies as well then capitalized on the end of the month as well, because we had a kind of a nice uptrend. Now, I'm not saying all short strategies are going to be like this. Obviously, in niches like in small caps, in niches where if you're shorting new listings on like Binance, for example, these can be absolute high, absolute return P&Ls with a shorting strategy. But in a normal kind of portfolio where you're doing shorting strategies, especially if you're doing them on indexes, for example, those sort of things is normally going to be where shorting is not going to be your absolute P&L return, at least from my experience. I've never got it to really work. Next is kind of how the NQ market did overall. As we can see, for the most part, early of the month was quite long biased. We're getting some decent long action. And then October the 10th happened with this huge flush. Was able to capture a lot of that, which also helped pad a lot of the losses on my up strategies. And then for the most part, we kind of grinded it up higher. I lost a bit of P&L during this time. I don't think any of my strategies really worked on these days. They were all kind of in wrong positions, which is fine. But that's just kind of how the game goes. We definitely did capture up this nice long trend, though, of these past couple of days. Now, next, I want to show you kind of correlation. For the most part, the correlation is all green apart from like there was like a couple of days where the strategies were pretty correlated. You might be able to guess what days they were. It was primarily this day, but the rest of the time it was quite uncorrelated or low correlation. So overall, happy with the portfolio so far. As I've mentioned in other videos, for correlation, I don't really base this much on just 1 month's correlation. I'm normally looking over quarters and even years. So I'm not that fussed with on per month, but I like to show it because a lot of people maybe don't even know about correlation or not looking at correlation in their own portfolio. So it's a cool way to kind of show everyone. Now, next, how do I actually do this? I thought I'd always add these to these videos. So if you're watching my other recaps, you'll probably notice this as well. But all these strategies, apart from the crypto ones, are running through NinjaTrader. Primarily what I trade is futures. So that's ESNQ, YM, CL, basically all the commodities, GC as well. That's been actually a really good performer in my portfolio. So, but they all run through NinjaTrader. The reason why is I absolutely love that I can backtest through NinjaTrader and also have the same code execute automatically just actually live. So it's a great testing flow and I don't have to create 2 different codes. Now I do actually have algos for other markets as well, such I have ones for interactive brokers, small caps, which is on DAS. And then obviously in crypto, I primarily just go straight to exchange and that's primarily Hyperliquid or Binance. But at least for the core of the portfolio at the moment, it is primarily futures and then crypto as well. Now the other times when I'm, for example, connecting to Binance or Hyperliquid, I'm just going straight through API. It's not through NinjaTrader itself. NinjaTrader is a brokerage and a platform, which makes it quite easy if you're trying to do future stuff. But obviously if you're trying to trade crypto and things like that, I'd recommend going straight API to Binance or Hyperliquid or another exchange of your choice. But yeah, so far, great month. Let's see what the next month brings. I've definitely been on a bit of a lucky period since my drawdown 4 months ago, I think.